Good morning. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhury and with me is Mathew. And on this show, we'll take all your stock-related queries, be it a short-term query or a long-term investment strategy. Do write to us on the WhatsApp number that's flashing on your screen or on any of the social media channels. And we'll take your queries from there. But before we jump into that, let's take a quick stop of the markets. The Nifty 50 trading in the red, down about 0.25% at this point, holding above 24,400 levels, a bit of a weaker day, a soft day rather, for the markets. Let's pull up the contributors of the Nifty 50 and you'll see that it's the banks that's pulling the index down today. It's HDFC Bank, ICICI, Axis, SBI, all in the red today. On the other hand, you have RIL, Tata Motors and NTPC in the green. On the broader end of the spectrum, you have the Nifty mid-cap doing better than what the benchmark is. It's up about 0.6% and small cap up over a percent higher. Let's talk about the sectors as well. It's the media sector that's doing extremely well in trade, up about 2% in trade. Oil and gas up 1.5%, energy up over 1%, and realty as well doing well in trade. On the other hand, you have something like consumption, FMCG, banks, autos, all in the red at this point. Let me also mark a couple of counters that are moving in trade. First is Bajaj Finance. It's also one of the losers on the Nifty 50, down over 2% in trade after their quarterly numbers. A rise in costs is what we've seen. It's a bit of a impact of that on the stock. There's HUL as well, down about 1%. Again, after its first quarter numbers. ICICI Securities has now come off its highs, a decent show of numbers there, but at the low point of the day at this point. There's Tata Consumer as well, down about 2.5% in trade after about a 3,000 odd crore rights issue. So there's a decline there as well. But of course, the focus for today is the FMCG space, and I'm joined by my colleague Mahima to give us a brokerage view on the budget announcement around the consumption that is likely to pick up in the country. Mahima, over to you.
Right, Smriti. So, as you rightly mentioned, the FMCG space is in focus post-budget announcements yesterday. However, the Nifty FMCG is taking a bit of profit booking today, but brokerages remain positive on the FMCG space. I'll start with Investec. They've said that, positive for urban, there are a lot of positives for urban consumption in the budget announcements, which is some of direct tax benefits, plus direct tax benefit transfers for the first-time employees. They've also said that ITC and Titan are the two companies that are the major beneficiaries because of no tax on the tobacco is an extreme positive for ITC, and the slashing of import duty on gold is a positive for Titan. What they've also said that is that higher spending on infrastructure has an indirect impact on FMCG, as there will be more disposable income in the hands of the rural population. So rural demand will see an uptick from here. What they've also said is that EN is now out of GST ambit, which aids cost for the spirit companies. So this will help them as well. Now, Nomura, however, says that it is a little cautious on consumption. However, JP Morgan again says that the tweak in income tax slab and increase in standard deduction will support the consumption and aid margins for FMCG companies. Jefferies has also mentioned that they are positive on ITC and Titan. CLS has said that ITC and Titan are discretionary plays and maybe key gainers. However, they've also said that the employment subsidy and the small tax cuts are supportive of affordable discretionary demand like QSR and consumer durables as well. And then JM Financial is saying that the financial support for setting up nucleus breeding centers for a lot of shrimp farming and exporting companies is also a benefit and positive for companies like Avanti Feeds, Epic Frozen Food, etc. And lastly, they're saying that higher revenue expenditure and rise in disposable income will aid growth for companies like Zomato, Gibran Food, Devyani International and Godrej Consumer Products. So this is the overall view of what the brokerages are saying on the entire FMCG space post the budget announcement yesterday.
Thanks so much, Mahima, for getting us those details. Now, we've got Saurabh Jain, Equity Head, Research at SMC Global Securities, and we've also got Vaishali Parekh, Vice President Technical Research at Prabhudas Liyada, joining in. Thank you so much to the both of you for taking the time. Saurabh, I'll come to you first on the announcements and lack of them and the resultant moves in the equity markets and specifically on the FMCG pack. What do you make of them and what would you buy at this juncture?
Hi, good morning, Alex. See, all the major points have been covered by a colleague. I feel that the FMCG pack will be good to, it would be good to have in the portfolio. The companies that I like includes Bikaji Foods, Heritage Foods, and companies like Marico and Dabur. And apart from that, United Spirits, which have recently come up with the numbers, shown expansion in the margins and the good volume growth in the prestige and above segments. I think these are the companies which looks good from the investment perspective.
Okay, fair point. Vaishali, any opportunities that you're seeing in the FMCG space? Of course, we didn't really talk about it, but HUL results were yesterday as well.
Yes, see, FMCG counter on the whole has really shown a good run-up. So I guess in my understanding, right now is a time where it's just taking a breather. So we have been recommending Tata Consumer since a very long time, and it has come for a near-term target has been met with. So I would yet look at it. I mean, I would wait for a dip around 1200 levels to 1180 levels, because the further price projection, what we are looking at is around 1280 to 1320. So I guess FMCG counter should continue to do well, but for now, it's very likely that we can see some profit.
All right, let's start off with the queries now. Good morning to both the guests. The first one is on Canara Bank. This is from Narendran. Vaishali, coming to you on this one, they bought the counter at a price of 122, so slightly higher levels, but they say they can hold for a while. What's the short to medium term view on this?
So actually, we are looking at Bank Nifty on the whole, and 51,000 levels, if they break, then we may see some profit booking coming in. So likewise, even in the PSU banking stocks, we've been seeing SBI, Canara Bank, all are showing some signs of profit booking. So I would say that there could be a dip going towards around 100 levels also in Canara Bank. So it's for now, it shows signs of weakness.
All right, Jaspreet from Chandigarh is asking this next question. He's talking about Sangvi movers for the perspective of the next 3 to 5 years. He's already bought into the counter and he's bought at levels of 1125. Slightly elevated levels. The stock is currently trading with gains of about 2.7%, but it is off his buy price. Saurabh, on the fundamentals, this has been looked at as a proxy to that infrastructure construction play. Would you suggest that this is something that you can hold on to for the next 3 to 5 years?
Certainly, yes. If you look, the capital goods and the infrastructure place looks very much promising. The government finances are all in control, and we are talking about the private capex coming in sooner. So in that sense, I think it makes sense to have a company like this in the portfolio. And apart from, Sangvi Mover is a very old company. The operational metrics are also solid. And when we are talking about the growth coming in the future, I think the operational metrics will further improve from here onwards. And it makes sense to hold for another 3 to 5 years.
All right. Next counter is Godrej Agrovet. This is from Sriram, who's writing in from Thane. They bought the counter at a price of 485. It's currently trading above 850 levels, and it's up today about 2.8% at this point. Saurabh, on something like a Godrej Agrovet, we heard Miss Nirmala Sitharaman talk about some agricultural reforms as well. Is that what's going to play into Godrej Agrovet? And would you suggest maybe booking some profits, considering there's a good amount of profit here?
See, catalyst are in the favor of the FMCG pack, and the Godrej Agro is also moving in that fashion. I think surely the company is going to make benefits out of the measures taken in the budget, and above also we are seeing good amount of monsoon also this time in comparison to the last year. So I feel that the company will post a good set of numbers going forward. But yes, it is always good to book some partial profits. In that sense, if you want to book some partial profit, you can go ahead and shift your money in the companies like Bikaji or Heritage.
This is an open-ended question, Vaishali. This one's for you. We've got Akash Agarwal from Kolkata, and he's saying that he wants to start his investment journey with 50,000 rupees. That kind of narrows down the number of stocks that you can buy, at least those with a ticket price of above 50,000 not available. But what would you suggest that he can pick up in the short term for the next 2 to 3 months? I'm assuming that he wants to hold these for the long term.
So, well, I would go for stocks which are quite neutral right now. So, one of them is Coal India. I think right now what we are seeing, Pharma Pack is doing very well. So, Sun Pharma, Cipla, they still look good to me. ONGC, so a basket of all these stocks should do well.
All right, the next counter is IRCTC. The question is from Vinod, who's writing in from Gujarat. They bought the counter at slightly elevated levels, above 1,000 rupees. It's currently trading at 973 rupees, given about 56% returns in the last 1 year. Vaishali, what's the short to medium term target on this one is the question.
IRCTC, actually, it has just been consolidating. I mean, and it's quite vulnerable to all the market whipsaws. So right now, I would say that, well, we are seeing it is showing some signs of profit booking. So on a broad base, I would say 940 acts as a support. This stock gathers strength only above 1050 level. So I would say just hold on. There's nothing really happening. Let it cross 1050 levels. Till then, I think it is just consolidating.
Right. GMR Infra is the next counter that we're talking about, and Dr. Sanjeev Dikshat is asking about this particular counter. He's bought at levels of 35 per share. He's holding as many as 5,000 shares. He's well in the money. He's making a decent profit on his investment. He's wondering whether to hold for the long term. Saurabh, based on the fundamentals, is this a counter that you would say that you should hold for the long term?
Certainly, yes, Alex. The company has improved its operational metrics a lot. The balance sheet has gone very much under change. All businesses are putting up a good show. It makes sense to hold for long term.
All right. The next counter is IndusInd Bank. The question is from Sujay, who's writing in from Kolkata. They want to know the 1 year outlook on this one. Saurabh, but IndusInd Bank hasn't done too well in the last year, actually, and right now it's the whole banking space that looks a little weaker. Would you suggest holding on to an IndusInd Bank or maybe switch to something else?
See, on the valuation side, if you look at it, it is probably trading at a 1 time to book value. The operational metrics are also okay, but it's not the favorite among the private sector banks. I mean, if you want to go in the banking sector in the private space, I prefer Axis Bank over IndusInd Bank.
All right, IndusInd Bank was the counter we just talked about. That was Sujay's question. And Gautam's got the next question. He's writing in from Mumbai, and he's got 2,500 shares of Wipro, which he bought at 502 levels. And he's asking whether he should hold or sell. It's not too far away from the current market price, and he's got a time frame of the next 12 to 18 months, which is not too far. But Vaishali, we've seen quite a bit of a crack over the last few trading sessions. He's bought it at pretty much where the market is right now for Wipro. Would you suggest that he holds on to this?
I would think so, because Wipro was showing a lot of promise prior to the results. Overall trend is still intact. It gets negated only below 490, 485, 490 levels. So I would say wait and watch, because overall what we are seeing is that IT sector is taking over, getting into momentum. So I would say if it's time is not a worry, then one should hold on, because in all likelihood this can retest at least 550, 570 levels.
All right, Vaishali, the next counter is WPIL. The question is from Dhansuklal. They say they bought the counter 20 years ago, and the counter is trading at an all-time high. Would you suggest booking profits into this one at this point, of course, or should you maybe wait a little bit more because you see more upside into this?
I'll just have a look.
Yeah.
So WPIL is 468.
Yes,
that's the price going on, right? I think there is still scope of further upside. There is no sign of fatigue. In fact, the indicators show that there has been a minor consolidation with 430 as support. And if all going well, if this stock continues to get into the trend, I think 500 would be the level to watch for, 500, 520. That would be an ideal level. So all the same, keep 430 as stop loss and look for a target of 520.
520 on WPIL. It's up and about in trade today, 3.5%. We have to slip into a very quick break. We'll take more of your questions on the other side, so do stay tuned. Welcome back. You're watching Ask Profit and we're taking all of your stock-related questions. By the way, in case you've got them, you can send them to us on the number that is flashing at the bottom of your screen. Yeah, you still see the whole number. All right. Let's talk about the first question then. We've got AB Capital. And this is a stock that Sumit Ghosh wants to know about. He's bought at levels of 222 and he's looking for a 3-month view. He's asking what the target and the stop loss should be. He's got 400 shares. Vaishali, on the charts, how does it look?
So right now we are seeing some profit booking happening, and 200 should be kept as a stop loss. If it goes below 200, the trend gets damaged. And if 6 months is the horizon, then this can go towards 260 to 280.
All right. The next counter is Premier Explosives. Saurabh, would you have a coverage on this counter?
Certainly not.
Okay. Vaishali, on Premier Explosives, the question is from Sastamani from Coimbatore. The outlook is 2.5 years. Now, considering the counter has run up significantly in the last 1 year, over 200%, do you see more upside from here on?
So this is one of the defense stocks, right?
Yes.
So I think long-term trend is still intact. Even if I'm seeing since the horizon time period is pretty much long, we may see some profit booking coming at this juncture, say around 550 levels and all. But still, I think as I'm seeing the upward trajectory, this can go towards 800, 850 levels. So that is how one can, partial profit booking should not be ruled out. And take a chance when it shows a little bit of a dip to add more and once again get on track for 800, 850.
All right. We've got a bunch of short-term questions. I am circling back to you on this one, Vaishali. We've got a number of stocks that I mentioned, but all frontline. Infosys, Cipla, and Sun Pharmaceuticals. Is this the right time to buy into any one of them or all of them? Rajesh is asking this question. He's got a short-term perspective.
Infosys, I won't agree to it because though the trend is so strong, well, we've seen a good run up. But I'm looking at Cipla and Sun Pharma. They both look good to me. Sun Pharma, in fact, is showing a good trend. And well, for a near-term target, it is 1630. That's where the breakout level occurs. And 1635. So above 1635, we are ready for a target of 1650, 1660. So that is how Sun Pharma can be traded into. And Cipla, technically quite well placed. After a good consolidation, I think this stock should show some momentum and look for a target of 1530.
Ali, if you're in Mumbai, can you tell me when the sun will start shining?
Oh, sun has already started shining.
No, the reason I'm asking is that might actually be an easier question to answer than this next one, because Daniel is asking, will the Nifty 50 touch its all-time high this week?
Well, that's hard to tell. I won't be able to comment that.
Okay, so what are the key levels that you're watching for this week on the Nifty 50 then?
So I would say 24,200, a close below that brings weakness to Nifty. And about 24,650, we will say that we are back on track for higher targets. So in my opinion, right now, what I would say is that market is going through a sideways move. So right now we are seeing Bank Nifty is showing a lot of weakness, but the other stocks are holding well. So let's see, wait and watch scenario.
Right. The next counter is Ratnagiri Metals.
Ratnamani.
Sorry.
It's actually, it's
it's Ratnamani Metals. This is from Samir, who's writing in from Kolkata. The question is this the right time to buy the counter? Now, from a 1 year perspective, it's up about 40%. Vaishali, would you suggest, but seems to be in a bit of a consolidation. Vaishali, right time to buy this counter or should you wait?
I would say it is gradually going in an upward move, but well, one cannot rule out the market whipsaw. So if there is any meaning to it, I think 3100, 3200 acts as a very prominent support, which is also a 200-day moving average level, 3200. So I would say that accumulate with that in mind. And then longer term perspective, one can look for a target of 4,000 to 4,200.
All right. The next question is from Jeet, and he's asking about a couple of stocks that have done incredibly well. He's got BEL as well as HAL, Hindustan Aeronautics. He's got BEL at levels of 150. So this is a doubler for him. And he's got HAL at levels of 3,200, and he's done quite well here as well. So based on the fundamentals, would you say that there is considerable upside from this point as well? Or would you say that it makes sense to take money off the table?
I think it makes sense to take some money, partial money from the table, because while the growth prospects are very much bright, but at the same time valuations are too stretched. So in that sense, I think the valuations are actually capturing the forward future earning possibilities, future earnings. So in that sense, I think I would rather say book partial profits here.
Saurabh, would you say the same for an ABB? The question is from Shweta from Bangalore, who bought it at a price of 6,500 levels. It's above that price currently. But do you hold the same view for that one as well in terms of valuation?
Exactly. The growth prospects are very much promising, but the valuations have stretched in a very short span of time. It is always advisable to take some money off the table.
Okay, but at what level would you start accumulating on ABB specifically?
I think 15-17% kind of a correction cannot be ruled out. I think one should have a strategy to accumulate on corrections in a staggered manner.
Okay. This next question is from Sri Kishore, and he's writing in from Motihari, Bihar, and he's asking about Keynes Technology, which he's bought at levels of 3,500. He's wondering what the perspective is for the next 3 years. Saurabh, any coverage on this?
See, the growth prospects are very good, but at the same time, valuations are stretched. So if you want to chip in these stocks, I think wait for corrections.
All right. The next counter is Irida. The question is from Radha Krishna. They say they bought the counter at a price of 300 rupees. It's currently trading below that price. Vaishali, coming to you on this one, what's the target and how do you see this play out in the short to medium term?
So I think this person has bought the stock at a very high price, and right now it is consolidating. But yesterday's low is of prime factor. If we see yesterday's low breaking in, then I think we can see further downslide going towards 200. But if these levels are held on, then I think at least his cost price will be retested. And if we see a further higher levels, then maybe 330, 350.
One last question we're slipping in. Borosil Renewables is the name of the counter. Lavish, a regular viewer from Indore, is asking about this. He's asking whether this is something to buy from the long term. There were some announcements with regard to solar in the budget, right? And Saurabh, anything that you would say about this? Would you buy? Would you hold on? He's bought at levels of 620.
See, imposition of duty on the material coming from overseas market is actually good for the company, and that is why we are seeing good amount of jump in the stock. I think it can certainly change the operational metrics for Borosil Renewables, because these companies, while doing capacity utilization at a very good pace, was finding very hard to make money, because the material coming from the overseas markets is actually cheaper than their cost of production. So imposition of duty is actually good for them, and I think fortunes will change for this company.
All right. With that, we're completely out of time on this edition of Ask Profit. Thank you so much, Saurabh and Vaishali, for joining us on the show today and for answering so many questions for us. Viewers, thanks a lot for watching. And thank you so much, Alex. It was a pleasure hosting this show with you. Unfortunately, this is my last show. With you, Ask Profit. And I hope you enjoyed watching. And don't go anywhere. There's lots more lined up for you on NDTV Profit.
Hello and welcome to NDTV Profit. I am Muralidhar Swaminathan. We on NDTV have been bringing expert voices since yesterday after the budget was presented. Today we are bringing in S. Naren of ICICI Pru AMC. He needs no special introduction. Naren is one of the leading voices in the mutual fund industry and the markets. Naren, welcome to the show. Thanks for joining us. Okay, my first question, what are the big takeaways from the budget for you?
See, basically, this is not the first budget presented by the NDA government or by the Honorable Finance Minister. We've seen a situation where over the years they have committed themselves to very good macroeconomics, very stable macroeconomics, and kept the country on a road where they are very, very clear that you have to handle fiscal and current account and everything in a very, very good way. So this is part of the trends. We all want some fireworks of some kind, but then they keep things very stable, the macro so stable that India has been one of the countries where the bond market, the currency market, everything is very, very stable at this point of time, thanks to the macro at this point of time. Then there is nothing like, something which has drastically changed from 2 days back to today. That's why even the markets haven't drastically changed from 2 days back to today.
Right. So very clearly, I think as the Prime Minister himself has been saying, the roadmap for 2047 has kind of been laid out. So from your reading, what we require is sustained growth. Do you think the specific areas of focus in the budget will help us achieve that sustained growth of 7% plus?
I think ignoring not just the budget, I think overall I would say that, if you look at the last 5 years, the kind of growth, for example, we have seen in services exports due to global competency centers set up in India has been just fantastic. And so we've seen very, very sustained growth on the services side, particularly export. There was a time when, we had exports only of software. Today, we have got competency centers set up by so many multinationals in India, which are focused not just on IT, but on all kinds of services supporting their global outfits. So on that area, we have seen that. Now, the challenge actually is to create a situation whereby we are able to do that in manufacturing. And for that, budget is not the only document. We have to continuously keep improving the cost factors of cost of production on the manufacturing side, whether it is logistics, whether it is land, whether it is power, whether it is labor, everything. And there is a continuous challenge, because it is not that our competitor countries like Thailand or Vietnam or all those countries are not also trying to do the same thing. So even though, there is a China plus one strategy and the fantastic work done on PLI, which is not part of the budget document per se, I think there are continuous challenges because we have adequate competition in that area, unlike what we've seen on the services side. And the effort that needs to be continuously done to ensure that our power cost is reasonable or logistics cost is reasonable and land cost is reasonable, I think is a continuous onward journey, if you ask me.
Right. Typically we are a consumption-driven economy, and to a large extent I find that the capex, of course, is 11.1 lakh crore, but the government has very clearly, the finance minister has said that they are not going to increase it further from what they did in the interim budget. So the ball is now in the court of the private sector. Do you think private sector is not doing enough to go for mega projects or scale that is required for us to sustain this kind of a growth?
I find, we at ICICI find this entire debate on private sector capex not so logical. See, let's assume you're a cement company and you find that your capacity is utilized. Why would a cement company not put more capex? Suppose you're a two-wheeler or a four-wheeler company and your existing capacity is fully utilized. You'll put up more capex. So I don't think this debate on this entire private sector capex is justified at all, because every company will act on its own interest. Some of the problems that are there is to do with the fact that Indian corporate sector is in fine fettle and in great shape. So instead of borrowing from the banks or projects or from financial institutions to put up projects, they can just do it with the internal accruals that they have. That you don't see projects that are there. And second is, some of them are now not putting up grassroots projects where they need to actually set up from the bay, from buying from land, etc. And land is not costly in India. I'm sure land is much costlier in India than in most other countries in the world. So we have a situation where they're doing grassroots projects at this point of time. So this entire debate on private sector capex is quite illogical, because of the fact that many of them will do it if it makes sense to them, and why would they not do it? So as the sectors get fully utilized, they will do it, and we're seeing it across all the companies that we cover at ICICI Prudential, that most companies which are doing well and are using their capacity fully, they are doing capex and expanding. Are they doing it in new location, or are they doing it in existing location? Many of them are doing it in existing locations.
I think that's a very, very important insight that you have given to us. It's important to distinguish between capital requirement based on business, based on growth of individual companies as opposed to the country's ambitions, if I could say. The next important issue, Naren, is about jobs. This has been a serious concern. There is growth. We have had tremendous sustainability in terms of growth, and we are the fastest growing. But in terms of jobs, there has been a huge problem. The budget this time around has specifically taken the route of incentivizing employers to generate jobs. What are your thoughts on this?
I think it's a fantastic step. I think, we have to encourage job creation by employer. Encouraging job creation by the state government or central government is not the way. I think the step that the government has done this time, both through the apprenticeship process and the other process that they give incentive for the companies to hire, particularly people who are paid less than a certain amount, is the right way forward. And I think the model is absolutely correct and logical at this point of time, and that is the right way. And I think we are very, very impressed by the way the government policy has been done in this budget in this area.
And that will lead to skill development, which is much required, I suppose.
Yes, absolutely. If you look at all the areas where we have actually gained in skill development, whether if you look at IT or whether you look at chemistry in drug area, all these areas, the skill development has happened because of these kind of things, and the step taken by the government this time to do it is, I think, a great step in the long term. Whether it will help in the next 3 to 6 months, it may not, but I think this will clearly help in the long term.
Okay, the other key area which is very critical for India to unleash its potential is the MSMEs. This budget is again focusing on MSMEs, especially their credit needs. Now that's a huge problem for MSMEs. Their cost of credit, even during normal interest rate regime, is very high. What are your thoughts on this? How do you think this will help the MSMEs unleash their potential?
I do not know. Maybe, I've worked for 35 years and we've seen in 90s people paying 16, 17, 18%. Today, even the MSMEs, many of them, which are financially in good shape, I think they pay a single digit, 9.5%, 10% maybe. So, I think it is important for MSMEs to practice good financial management and have good balance sheets. And if they do it, I think today there are so many providers that their borrowing costs are also more reasonable. I've seen unreasonable borrowing costs in 90s. I don't see that at this point of time. I think the challenges come to MSMEs if they don't have good balance sheets and they do not have good profit and loss account. And, I'm not very clear what should the government do, what should the lenders do with all these kind of MSMEs. And if they have competitive advantage and they are actually going through only a temporary downturn because of some industry related issue, then it is fine. But if they are actually uncompetitive and they do not have any competitive advantage, should they be lent more and more money to just survive or prevent them from dying? This is a question I do not have clear answers to.
Yeah, very important thought. I think, again, as you rightly said, it's not just making funds available, they should be competitive. But as an aside, still investors love to invest in small and mid-cap stocks. That's where they are making a lot of money.
Yeah, but when the government talks of MSME, they are not talking of that segment. They are talking of a segment much below that. Today, if you look at mid and small cap stocks today, most of them are able to do QIPs, they are able to do disinvest, they are able to raise money in the form of fresh equity very, very easily. So for them to raise money is not a problem at all, but they are not the MSME. I would say they are one step ahead of MSME, they are much bigger. And in SME IPO, where we are not participant, I think we are seeing some excesses there in equity valuation there, but the problem is not lending there. The worry for me is the equity investor there, and there the challenges we are worried about is the retail investor who is investing in the SME IPO. Mutual funds are not connected to that segment in any way, but there we are worried about the retail investor there, not about the issuer.
So that brings me to the specifics. The most important issue that has been talked about and some action in the budget is the F&O trading. The huge volumes that we have seen in F&O and the surge in trading in F&O. Finally, we have seen a hike in STT for F&O. Do you think this will dent the F&O volumes, or will the F&O trader continue to trade in spite of this?
Not at all. The increase has been very nominal. So I don't think it will have any impact on F&O trading in any way. Because it's not that 0.0625% becoming 0.1% is going to change the F&O trading. And I see the challenge is something different. Do investors understand the risk of F&O trading? Because if you have a one-way bull market after 2020-21, people don't understand the risks of equity as an asset class, and that is the biggest challenge that is there. And we at ICICI Prudential keep talking of asset allocation, and asset allocation. But people keep telling us, why don't you talk equity, and that is the challenge that we have at this point of time, because equities have not created any risk for many years at this point of time. They have not given any meaningful decline of even a decay at 10%. So that is a challenge. And so if it doesn't give a decline, people don't lose money in F&O also. So this is the challenge which we keep grappling with at ICICI Prudential, how to explain to investors that equity market carries a risk. And that is a challenge because if the equity market never declines,